Hey everybody, it's Chris Buteau with Cleveland Street Mortgage, and today I want to talk about rolling your closing cost into your loan. A lot of times I get that question, can I roll my closing cost into the loan? And it's a little bit of a misnomer. It misleads people. Sometimes it has to do with the confusion over how much cash you need to buy a house or to refinance. Typically it's in a purchase context. And let's say you got a $500,000 house and they're going to put 20% down. A lot of people think, oh, I need to bring $100,000 cash into this deal. I just need to make sure I have $100,000. And they either aren't thinking about the fact that, in addition to down payment, you have closing costs and prepaids and reserves, or they're thinking they can roll those in. And most of the time, the answer is you can't. Sometimes you can, but technically rolling costs in are for things like an FHA loan or a VA loan, and only for stipulated costs. And in each case, they have a funding fee. FHA has a funding fee, it's 1.75. VA has a funding fee, it ranges over 3%. And it's a one-time additional cost. And like VA will go to 100% loan to value. So if you're buying $500,000, you can borrow $500,000. And then if there's a 3% VA funding fee, $15,000 on top of that, they'll actually loan you $515,000. But on a conventional loan, it doesn't work that way typically. So if you're putting 20% down, and you've got $100,000 and that's all you've got, and you're counting on rolling the closing costs, really rolling the closing cost in that case only means taking a higher loan amount to cover the closing cost. But the problem you run into there is if you're at one of those thresholds, let's say you're at 20% down and that's all you've got, and you're thinking you're going to roll those closing costs, well now, that $400,000 loan amount becomes a $410,000 loan amount. And that's more than 80% of your loan. And so now you've triggered mortgage insurance. It's a different loan program. You may or may not qualify. So just be aware of that. Really, you're not rolling your closing cost in. Now you may, voluntarily or electively increase your increase your loan amount. You may even go over 80% and say, I'm willing to do that. I'm willing to trigger mortgage insurance because, I just need to bring in lower cash, and the program probably allows it. And that's fine as long as you're aware of what you're doing. And then sometimes, sometimes people say, I'm putting 50% down and I want to roll my closing cost in. And again, that's kind of a misnomer. If you're buying $500,000 and you're borrowing $250,000, and you want to roll your closing cost in, then you're really just borrowing $260,000. You're not going over 80%. You're still at 50 or 51% loan to value. It doesn't change the program. It doesn't change the pricing. And you're just electively increasing your loan amount. And you may think of that as rolling the closing cost in, but really you're just increasing the loan amount so that you're covering more of the cash needed to close. So anyway, hope that helps. Hope you have a great weekend. Thanks so much.